Welcome everyone. In this session, we are going to learn about principles of insurance. So, what exactly the principles of insurance? So, so there are different things that you have to learn severally and individually about principles of insurance. So, the main motive of insurance is cooperation. So, insurance is defined as the equitable transfer of risk of loss from one entity to another in exchange of a premium. So, a contract of insurance is a mercantile contract. Mercantile is what? It is called as business contract. So, all the principles applicable to mercantile contracts are applicable to contracts of insurance, since insurance is also a business, and since the contract has a same essence, or contractual essence is also there, or the elements of contracts are also there in you know insurance. So there are different principles applicable to contracts of insurance. They are: first one is nature of contract, second one is utmost good faith, third one is insurable interest, fourth one is indemnity, fifth one is subrogation, sixth one is contribution, seventh one is proximate cause, and eighth one is loss of minimization. So maybe you may get a question like, what is mean by principle of uberme fedi? Uberme fedi. Uberme fedi is what exactly? Utmost good faith. Sometime you will get a question like, what do you mean by subrogation? Okay, it's a part of element of principle or variable of principles of insurance. So sometime it may be asked like, what are the principle of insurance? So you have to write all the 9 elements. So let us discuss on indemnitor. Okay, so indemnitor is a wrongdoer. So those who done a mistake, or those who made any mistake, or those who done any act which caused some damages, etc. So indemnitor. And indemnifier is what? It's like a person who gives compensation for the indemnitor, that is insurer. So indemnitor, have an example: I met with an accident with my car, so I made a mistake, or some other person made a mistake, so my car has got a damage. So the other person, the X, is a wrongdoer, indemnitor. His insurance company will compensate the damage caused for me, actually. So his insurance company will compensate me. So he is X is a insured person, and he commit a wrongdoing. And the word is called as indemnify. Okay, indemnify. The compensation, giving compensation, is called indemnify. What is mean by aggrieved party? So aggrieved party is a party who is deprived of loss, or he might be infringed. Some other people infringed his rights. Is called as a aggrieved party. We call in a layman style, we can call him as a victim. Okay. So indemnity is a contractual obligation of one party to compensate the loss incurred to the other party due to the acts of indemnitor or any other party. Okay, so 1 second. So we learned about the nature of contract. There shall be an agreement, there shall be a lawful consideration, lawful object is there, free consent is there, then competent parties are there, then consensus add item is there, possibility and you know certainty of a performance are there. I hope you know about all these things. One second.
ഗുഡ് മോർണിംഗ് സർ. നമ്മുടെ ഇവിടുത്തെ റമദാൻ്റെ ഹോളിഡേയ്സ് തുടങ്ങി. അപ്പം മോസ്റ്റ് ഓഫ് ദി ആൾക്കാർക്കും ഇന്ന് തൊട്ടാണ് ഓഫ്. അപ്പം നമുക്ക് ഇനി ഈ വീക്കിലേക്ക് ക്ലാസ് കണ്ടക്ട് ചെയ്യാൻ പറ്റില്ല, കാരണം ഹോളിഡേ ആയതുകൊണ്ട് ആരും അറ്റൻഡ് ചെയ്യത്തില്ല. അപ്പോൾ നമുക്ക് എല്ലാവർക്കും ഒരു വെനസ്ഡേ വരെയാണ് ഓഫ് പറഞ്ഞിരിക്കുന്നത്. അപ്പോൾ നമുക്ക് ഈ വീക്ക് എന്തായാലും ക്ലാസ് വേണ്ട. അപ്പം നമുക്ക് അടുത്ത വീക്കിലേക്ക് അത് കണ്ടക്ട് ചെയ്യാം. ഓക്കെ സർ?
Okay, so get into, yeah, so this is the first principle of a contract, nature of contract. Okay, the first principle of a insurance is it has a nature of contract. So nature of contract is a fundamental principle of a insurance contract. An insurance contract comes into existence when one party makes an offer or proposal of a contract, the party accepts the proposal. So a contract should be simple to be valid contract, and it should be enforceable by law. Have an example. I am cultivating hemp. Cultivating hemp in Kerala, and I have taken an insurance policy for hemp. Later, the insurance company identify hemp cultivation is illegal in Kerala, and they said like this contract is void, not voidable. This contract is void because at the beginning itself, void at the beginning itself, because there is a law prevailing. Cultivation of a hemp is illegal, so insurance company cannot give such thing, such insurance to that crop. So it should be valid contract. So the person entering into a contract should enter with his free consent also. So all things I have explained here: agreement, lawful consideration, lawful object, free consent, then competent parties, consensus add item, that means identity of minds, then possibility and certainty of performance. That means have an example. I just want to go to sun. I just want to go to the sky and touch the sky and come back. So I need insurance policy for that? No. But you will get insurance policy for going to Mars, because Elon Musk is giving guarantee. Elon Musk is trying to take people, though, you know that 2 lakhs people have been booked for one side ticket to Mars, because they are going to colonize Mars. So there is a possibility, we can say that there is a possibility and certainty of performance. So they will get the insurance. If anything happens, definitely their family will get insurance. You know that 2 lakhs people pre-booked for that, to go to Mars and permanently reside over there. See the crazy people. We don't accept that, right? So next is a principle of ubrime fidi, that is utmost good faith. So under this insurance contract, both the parties should have faith over each other. That means both parties, that means the insured and insurer should have a good faith. Okay, have an example. That Kuruppa movie, that Sugumara Kuruppa doesn't had a good faith, okay, of taking or entering into that contract or taking a insurance policy. Okay, maybe he had a good faith at the time of taking, but later that good faith had gone, right? It is called as a mala faith, that is bad faith. Okay, so there is the element is needed, that is utmost good faith. For the insurance company or the insured person, and insurer should need utmost good faith till until the end and the beginning Okay, so as a client, it is the duty of the insured to be disclose all the facts to the insurance company. Like, have an example: if you are taking, if X is going to take a medical insurance, and X had a pre-cardiac problem, and he had been admitted for 1 month in a hospital, but he is not disclosing at the time of taking any health insurance. This is called as fraud. So any fraud or misrepresentation of fact can result into cancellation of the interest, and definitely it will be penalized also. What next? Principle of insurable interest. What is principle of insurable interest? So insurable interest is needed, right? Under this principle of insurance, the insured must have interest in subject matter. That means insured person means those who pay the for the or those who pay the premium must have the interest in subject matter of the insurance. That is, absence of insurance makes the contract null and void. Absence of insurance, so he so there is a insurable interest means there shall be a risk factor. So absence of insurance also make the contract null and void. So if there is no insurable interest, so I need an insurable interest, right? As a person, my insurable interest is health. Okay, so there shall be an interest. An insurance company will not issue a policy if there is no insurable interest. So an insurable interest must exist at the time of purchase of the insurance. For example, a creditor has an insurable interest in the life of a debtor. If a bank is giving loan to a student, definitely he has an insurable interest of the life of the debtor. So what exactly? The bank asks the debtor to take a life insurance policy, or bank will give the insurance policy, and he will be deducted that money from whom? From um, from the debtor. So a person is considered to have an ultimate interest in the life of their spouse, etc., or health of their spouse, etc., or vehicle, or building, etc., can be called as insurable interest. So next one is principle of indemnity. Principle of indemnity. So indemnity means security or compensation against loss and damages. Indemnity means security or compensation against loss and damages. So principle of indemnity is such principle of insurance stating that an insured may not be compensated by the insurance company in an amount exceeding the insured economic loss. So indemnity will be covered up to a limit. That means up to a premium. There is a premium limit, right? If I pay 1,000 rupees, my insured amount will be, or indemnified or indemnity amount will be 1 lakh. If I pay 2,000, 2 lakhs. So if I pay 1,000 rupees and asking for 3 lakh, it won't happen. Indemnity, there is a cover, or there is a limitation for indemnity or indemnified amount. So in this type of insurance, the insured would be compensation with the amount equivalent to the actual loss and not the amount exceeding the loss. So this is actually a regulatory principle. So this principle is observed more strictly in property insurance than in life insurance. So property insurance, have an example, car, there is a depreciation amount. So there is an indemnity limitation. There is an indemnity limitation. So they will cut the depreciation, and then only they will give the amount. The purpose of this principle is to set back the insured to the same financial position that exceeded before the loss or damage occurred. So next is principle of subrogation. Principle of subrogation. So the principle of subrogation enables the insured to claim the amount from the third party responsible for the loss. It allows the insurer to pursue legal methods to recover the amount of loss. That is, have an example, if you get insured in a road accident, so due to reckless driving or reckless or rash and negligent driving, so due to consider it as due to the recklessness or rash and negligent driving of the third party, consider it like that. So insurance company will compensate your loss and will also sue the third party to recover the money paid as claim. That is called as a subrogation. Okay, subrogation means what? Here you can read, as per the principle, after the insured is compensated for the loss due to the damage to the property insured, then the right of ownership of the such property passes to the insurer. Okay, so this principle is corollary of the principle of indemnity and is applicable to all contracts of the indemnity. So according to the principle of subrogation, when the insured is compensated for the losses due to the damage to his insured property, then the ownership right of such property shifted to the insurer. Okay, so have an example, a car. Your car met with an accident, or somebody's car met with an accident and had got a total loss. Total loss. So insurance company will give a lump sum money for your car. Have an example, 4 lakhs for your car, and the car will be taken by the insurance company because it is total loss. It will be considered as total loss. You cannot claim the car back. No, because if the insurance company claim it as like a total loss, then the scrap will be go to the insurance company. Okay, that is called as principle of subrogation. So another example is, put it in this way, as I said, like somebody met with an accident, and A met with an accident, and X, due to X reckless driving, and the insurance company give compensation to A, and definitely insurance company will file a case against whom? Case against X, right, for rash and negligent driving. So that is also subrogation. What's the meaning of subrogation? Subrogate means to add. Okay, subrogation means to add something. Have an example. Uh, um, you know, with your CV, you are adding your certificates. It's called as a subrogation. You are subrogating it. Then the meaning of subrogation is like sorry, I'm wrong. It is corroboration. Corroboration is adding something. Subrogation is like a what exactly one person or group by another is respect of a death or insurance claim accompanied by the transfer of any associated right and duties. So have an example, if I settled the insured person, and I have to take, I am an insurance company, I have to take the compensation from the another party, is called as a subrogation. So subrogation is the assumption by a third party of another party's legal right to collect a debt or damage. It's called as a subrogation. It is a actually legal doctrine whereby one person is entitled to enforce the subsisting or revived rights of another for one's own benefit. It's called as a subrogation. So as I said, the example is very very right. If you want another example, like when an insured driver, actually his car is totally lost through the fault of another driver, so the insurance carrier or insurance company will reimburse the covered driver under the terms of the policy and then purchase legal action against the uh, action, I mean, like the faulty drive. And what exactly, if it is a total loss, they will take the car also. Okay, so that is what exactly called as subrogation. The, in a nutshell, I can say like to put in the place of another. Subrogation is what? To put in the place of another, to substitute. Okay, it's called as a subrogation. If you are a wrongdoer, insurance company will give claim. Oh, sorry, insurance company will give the or insurance company will indemnify the aggrieved party, and they will take legal action against you. That is called as a subrogation. If the car, the same party, the aggrieved party and the wrongdoer are same, they will take the property from you. I mean, like, have an example. Because of your drunken drive, the the car has got, you know, got crashed, and it is proved that you had consumed liquor, and it is understood that you are violated the insurance rules and regulations. So then you cannot claim anything. You cannot claim anything because of your reckless driving. The insurance company will claim. Insurance company will give the total loss certificate to your car, and they will give the lump sum money for your car, and they will take the car. You can see some cars will be abandoned in some places in the highways. It will be considered as total loss, and insurance company will take it as a scrap. Okay, that is called as a subrogation in place of another. So next is principle of contribution. So what exactly principle of contribution? So according to this principle, the insured can claim the compensation only to the extent of actual loss, either from all insurers or from any one insurer. Have an example. Mr. A insures his property worth rupees 1 lakh with the two insurer, AIG Limited and MetLife. For AIG he has paid 90,000 and MetLife he has paid 60,000. Okay, as sorry, AIG he has insured for 90,000 and MetLife he has insured for 60,000. So a actual property destroyed is worth 60,000. Then A can claim the full loss of a 60,000 either from AIG Limited or MetLife, or he can claim 36,000 from AIG and 24,000 from MetLife. That is called as the principle of contribution. You cannot claim the same insurance policy. Same insurance policy means same risk covered from two insurer, with the two insurer. Have an example. I have taken two accident insurance from ICICI and one from LIC. When anything happens, actually, I incurred a loss of a damage of 1 lakh rupees, and my accident claim with LIC is 50,000. My accident claim with ICIC is 50,000. Okay, consider I incurred a loss of 1 lakh, so I can ask them to contribute equally, because the total loss is 1 lakh. Okay, total loss is 1 lakh. Consider if I have only 50,000 loss, I cannot take it from both the insurance company, from AIG, ICICI and from LIC. So both I cannot claim 50,000. No, either I can go with the LIC and ask for 50,000, or I can go with the ICICI. Or I can do one thing, I can equally distribute it, like a 25 from ICIC and 25,000 from LIC. If you are claiming your insurance of same for a same risk from two party, it is a crime. For two insurance company, it is a crime. Okay, so it is called as a principle of contribution. Next one is principle of causa proxima, that is nearest interest. Causa proxima is called as nearest cause, that is double yeah, so that is proximate means nearest. So the loss of insured property can be caused by more than one cause in succession to another. So it is only the nearest reason and not the remote reason in the factor to be taken into account. Okay, like so nearest cause or direct cause. So this principle is applicable when the loss is the result of two or more causes. So the proximate cause means the most dominant and most effective cause of loss is considered. So this principle is applicable when there are series of causes of damages or losses. So the property may be insured against some causes and not against all causes. That means, have an example, I can take a vehicle insurance for accident, for theft, for flood. I cannot generalize it. Yeah, I am taking vehicle insurance. Vehicle insurance for what? You can take vehicle insurance for accident. Mostly people will only take vehicle insurance for accident. You will get money, or you can claim insurance when your car has lost because of theft. Okay, if you have a theft insurance, until and unless you don't have a theft insurance, you cannot claim with your accident insurance. That is called as a causa proxima. So insurer is liable only if the nearest cause comes within the meaning of a risk insured. Is called as a causa proxima. So proximate cause definition is like the active and efficient cause that set in motion train of events which brings about a result without the intervention of any force started and working actively from a new and independent source. I will explain you. Have an example. Accident insurance. Accident insurance. So in accident insurance, have an example. There is a proximity of catching fire. Catching fire. So I'm talking about vehicle insurance. So if you take a vehicle insurance for accident, it will cover the fire also. It will cover the fire also. So that means there is a proximate or there is a near cause. So fire blazing a vehicle by its own, by or due to accident, it's a part of accident. So there is a near cause, right? A uh, the principal proximate cause is there, right? Have an example. The accident, this fire has blazed because of the sanitizer that you have kept inside the car. You met with an accident, or X met with an accident, and because of the sanitizer, the car has ablazed. At the time of evaluating the accident spot, the insurance company has identified the accident, the fire has been the car has got, our car has got the fire. It's because of the sanitizer or nail polish inside the car. It is not covered. It is not covered because the it is because of the problem with X. Like he has put an inflammable item in the car that made the car ablaze. Okay, it is not because of the accident. If there is no sanitizer, the car won't be blazed. Okay, so we cannot consider it as a uh, uh, you know um, cosa proxima. Okay, next is principle of loss minimization. Principle of loss minimization. So under this principle, it is the duty of the insured to take all possible steps to minimize the loss to the insured property. Have an example. I have taken a fire insurance to my uh, paint manufacturing firm. Okay, paint manufacturing firm. I have taken fire insurance for my paint manufacturing firm. You know that paint manufacturing is very dangerous, you know, place, because chemicals are there, fumification are there. You know, if there is any little sparks will leads to, you know, very uncontrollable fire. Losses will happen. Loss in terms of labor, in terms of money, in terms of machine property, etc. But I haven't done any of the fire extinguishing, or you know, I haven't uh, prepared for, or I haven't, as per the safety rules, as per the industry law, I haven't put any fire exit or fire extinguishers or firefighting equipments in my premises. So it is my duty to avoid fire first. So insurance is not actually what exactly, it's a taken for granted item. So it is the onus of the insured person to avoid all the possible things or possible steps to minimize the losses or minimize the risk to be insured or insured property on the happening of a uncertain event. So have an example. I took health insurance. Okay, I took health insurance, and I'm not putting mask, or okay, I took life insurance. I took life insurance, or X took life insurance. And what exactly? X has suicide. X has suicided. He won't get. He cannot. His family won't get benefit out of his life insurance, because it is the onus of a Mr. X to protect himself first. He took life insurance for an inevitable incident. Inevitable incident. Suicide is not an inevitable incident. So the insured must not neglect and behave irresponsibility during such events just because the property is insured. So hence it is a responsibility of the insured to protect his insured property and avoid further losses. So this is the end of principle of insurance. So everyone, thank you so much.